Thanks for clicking. Canada's real estate industry, mortgage brokers, and realtors alike are continuing to beg the government for a bailout amid slumping sales.
The f*** you are.
Yeah, that's definitely going to be a popular sentiment, with RBC reporting that affordability is finally starting to get better, the best it's been since 2022. That is apparently not enough for these world-renowned sales prodigies. Canadian mortgage professionals recently ran 2 articles. The first noting that changes to the mortgage stress test could help to unlock more buying opportunities in Toronto's market, and the other asking if it's time to get rid of the mortgage stress test. And as for the realtors, well, they're arguing that Canada needs to end the foreign buyers ban, despite it receiving widespread support from Canadians. Yet, as we've covered on this channel, the central bank, the Bank of Canada, has been adamant that that mortgage stress test was instrumental in containing the fallout from the mortgage renewal crisis.
But policies that discourage too much leverage and encourage strong, dynamic underwriting like the stress test have proven effective when you look at the experience of the last couple of years.
I got both payments.
So what I want to do today is go over the pleas coming from the real estate industry, take a look at the extent to which their arguments make any sense, which is minimal, and then discuss some implications. I released a video last week saying that we should expect the industry to make continual pleas for government bailouts as sales continue to slump, and although that video was in regards to retirees, obviously that is exactly what they're doing. We will obviously continue to track how these pleas play out and the government's responses to them on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into these bailouts. On to the removal of the mortgage stress test. In its current form, CMHC, the government mandates that borrowers qualify at the greater of the contract rate plus 2% or 5.25. That stress test was first introduced in October of 2016, with CMHC noting that household indebtedness, at that time sitting at 168% of disposable income, was the greatest vulnerability to the economy. Fast forward to 2018, the government amended the stress test, setting the minimum qualifying rate at 4.79. This is when prices were sitting right here. Then in 2021, amid Canada's market bubble, when prices were sitting right here, lower than they are now, the government increased the minimum qualifying rate to 5.25. That stress test, as mentioned prior, has been largely credited with staving off disaster when the mortgage renewal wave hit.
Who needs it?
Yet, now, says our industry sales shooters, the government should look at removing that test, with one mortgage broker pleading that no one can afford to buy a condo in Toronto. Of those potential buyers of those condos in Toronto, says that broker, many are 30 single borrowers just relying on their income, so they don't want to stretch themselves too thin. That same broker said that if we remove the stress test, that could allow those borrowers to qualify for more money, potentially spurring more interest in condos. Honestly, this industry, that doesn't even make any sense. The stress test doesn't change the payment. It doesn't make anything more affordable. It just makes it so the banks will lend you more money.
If the bank's willing to loan me money, I must be able to afford it.
Yeah, that clip was from Too Big to Fail, an HBO docudrama about the global financial crisis, based on Aaron Sorkin's Too Big to Fail book. Watch the movie and get the history.
It's too much work.
But sure, let's take a look at the rest of the arguments in favor of removing the stress test. Another broker noted that it'll open a lot of opportunities for both realtors and mortgage brokers to re-engage their prospective clients. So if you remove the stress test, that'll be good for the real estate industry. That's not an argument for introducing more stress into the Canadian mortgage system. Yet, says another broker, the stress test made sense when things were high, so we can trim it by 1% now that the market is stable. That 4.79% stress test was introduced in 2018, back when the market was here. The benchmark price was $501,000 compared to $690,000 now. So the government tightened up lending standards back when prices were much, much lower. So what on earth are you talking about?
What the f*** are you talking about, man?
So we've got brokers saying that removing or amending the stress test will help to improve affordability, which it 100% will not do. It will just make it look like these homes are more affordable to the average borrower, and also noting that that stress test is not so much needed now because prices have come down. Which, I mean, look at the graph. Next, never to let a good crisis go to waste, the realtors writing Prime Minister Mark Carney a letter.
Dear Die Hard, you rock.
Dear Mr. Carney, writes the realtor, with the global landscape shifting, my guess is that's code for the Trump tariffs, the foreign buyers ban sends an unwelcome message that global talent, innovation capital, and returning Canadians are unwelcome. As such, these restrictions on foreign buyers, says the writer, risk stifling high-value immigration and economic momentum when we need it the most. And of course, we do want to have that high-value immigration, those engineers, scientists, creatives, tech entrepreneurs, etc. Yet, if we read the actual ban or are in the industry, we'll find out that that ban has exceptions for those who are studying in Canada or have a valid work permit. They are allowed to buy. So what is he talking about? There is nothing about not being able to own a home that is keeping those students, those high-value workers, away from moving to Canada.
Where the f*** are you?
The only people that are really affected are non-resident foreign nationals, those more likely to speculate in Canada's market. But what the removal of the ban would do, of which I'm sure we are all well aware, would enable our little wolfies on Wall Street to hit TikTok right away, letting everyone know that if they didn't buy now, once that foreign buyers ban is removed, they'll be priced out of the market forever.
I will help you.
So, mortgage brokers, realtors, they're pleading with the government for a bailout. Loosened lending restrictions, removal of the foreign buyers ban, heavily supported by Canadians, in an attempt to get government support to bail out the industry. Which is incredible, because I heard in 2021 that every single one of them was basically Warren Buffett.
That was a lie.
But no, what these pleas tell me is that the industry is getting desperate, which also tells me is that the market is worse than the data is showing. They want the government to bail out the industry. They need the government to prop up prices, prop up incomes. As we've seen, the real estate market, especially in Toronto, is plunging down and plunging down fast. But the arguments that's being made are just bad arguments. They're sleight of hand. Borrowers need to have the removal of the stress test so they can borrow more, because right now they can't afford it, when the stress test has absolutely nothing to do with affordability. It has something to do with buying power. These weak arguments tell me that the underlying motivation is different than they're letting on, which of course I think we can all agree is probably that Beamer payment is coming due.
I don't know what to do. I don't know what to do.
Whether or not the government will bend to these calls coming from the real estate industry remains to be seen, but we will obviously continue to track how this all plays out on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, thanks so much for watching.